Do you have a net worth of $500,000? If you do, you should be proud of yourself. Technically, you belong to the top 29% of American households. But let me ask you a very personal question. Why do you still feel anxious when the monthly utility bill arrives? Why do you feel a knot in your stomach when you look at the rising cost of groceries? The truth is that net worth is often a vanity metric. It is a number on a piece of paper that makes you feel good at a dinner party. But it does not pay for your medication. It does not fund your travel. It does not put gas in your car. And in the year 2026, liquidity is more important than your total net worth. We have entered a period where the old rules of retirement no longer apply. Many of you are living in what I call the paper millionaire trap. You have $500,000 in total assets, but you are effectively living paycheck to paycheck. This happens because your wealth is locked away in a vault. And for most of you, that vault is your family home. If 70% of your wealth is tied up in your roof and your walls, you are not actually wealthy. You are simply a caretaker for a very expensive asset. A house does not produce income. A house consumes income through property taxes, insurance, and maintenance. In 2026, these costs have reached record highs. Inflation has changed the math of home ownership forever. Today, we are going to look at how to unlock that vault. We are going to explore how to turn a stagnant $500,000 net worth into real, spendable cash. Let us start by looking at the reality of your current situation. Imagine a typical household with $500,000 in total value. Usually $300,000 of that is home equity. $100,000 is in a retirement account. The rest is in cars, furniture, and a small checking account. On paper, this person is doing well. But in reality, they only have access to a small fraction of their wealth. The $300,000 in the home is sitting there, doing nothing for their daily life. It is like having a gold bar at the bottom of the ocean. You know it is there, but you cannot use it to buy a loaf of bread. This is why you feel stressed. This is why you feel like you are falling behind even though your net worth is growing. The first step to freedom is a shift in mindset. You must stop viewing your home as your primary retirement plan. A home is a place to live, not a checking account. The most powerful move you can make right now is downsizing. I know it sounds difficult to leave the home where you raised your family. The memories are built into the floorboards. But consider the math of your freedom. If you sell your $500,000 home and move into a $300,000 condo, you instantly unlock $200,000. Even after taxes and moving fees, you have a massive lump sum of cash. That cash can now be put to work in the market. In the year 2026, a simple high-yield account or a bond ladder can generate significant returns. If you invest that $200,000 at a 5% yield, you have an extra $10,000 a year. That is nearly $850 every single month. Think about what that extra money does for your stress levels. That money covers your groceries, your gas, and your internet bill. Suddenly, the pressure is gone. You are no longer fighting for every dollar. You are using your assets to serve you instead of you serving your assets. But what if you do not want to move? Many of you have deep roots in your neighborhood. In that case, you must look at a reverse mortgage with a very critical eye. A reverse mortgage allows you to tap into your home equity without making monthly payments. The bank pays you a lump sum or a monthly check. For the right person, this is a lifesaver. It turns your home into a personal ATM. However, it is not free money. The interest accumulates and reduces the inheritance you leave for your children. You must decide what is more important to you. Is it leaving a house to your kids, or is it living a dignified and comfortable life today? In 2026, many retirees are choosing their own comfort. They realize that their children would rather have a happy, independent parent than a house with a huge debt attached. Now let us talk about the invisible tax of aging, which is healthcare. In 2026, medical costs have outpaced general inflation. If your money is tied up in a house, an unexpected surgery can ruin your finances. Having liquidity means you can afford the best care without asking for a loan. It means you can stay in control of your own body and your own future. Now let us talk about your investable assets. Once you have unlocked some cash, you need a strategy for income. I recommend the three-bucket approach. The first bucket is your cash reserve. This should hold 2 years of living expenses in a safe, liquid account. This bucket protects you from market crashes. When the stock market goes down, you do not have to sell your investments at a loss. You simply spend from your cash bucket until the market recovers. The second bucket is for reliable income. This is where you keep your dividend-paying stocks and your bonds. The goal here is not to get rich quickly. The goal is to receive a steady check every quarter. The third bucket is for long-term growth. This is where you keep your diversified index funds. This bucket ensures that your wealth keeps pace with inflation over the next 20 years. By dividing your money this way, you create a psychological safety net. You know exactly where your next meal is coming from. You also know that your future is protected. This brings us to the topic of Social Security. This is the backbone of most American retirements. But most people make a massive mistake with the timing. If you are 62 today, the temptation to claim your benefits is strong. But in 2026, the penalty for claiming early is severe. If you wait until you are 70, your monthly check increases by 8% every year. That is a guaranteed return that you cannot find anywhere else in the world. By using your unlocked home equity to live on between ages 65 and 70, you are essentially buying a much larger pension. You are trading your house equity for a lifetime of higher checks. This is the ultimate secret to a wealthy retirement. Let us look at a case study of a couple we will call Frank and Mary. Frank and Mary had a net worth of $600,000. Most of it was in their large 4-bedroom house. They were struggling to pay for their health insurance and basic repairs. The taxes on their property were rising every single year. They decided to sell their home and move to a smaller, more modern townhouse. They cleared $250,000 in cash. They invested that money in a balanced portfolio. They also decided to delay their Social Security until age 70. Today, they have more disposable income than they did when they were working full-time. They are traveling more. They are less stressed. And they still have a beautiful home that is much easier to clean and maintain. They stopped being paper millionaires and started being actual wealthy people. The lesson here is that you must be proactive. Do not wait for a financial crisis to force your hand. Take control of your net worth while you are still healthy and clear-minded. Go to your computer this weekend and look at your total assets. How much of that number is actually available to spend tomorrow morning? If the answer is less than 20%, you have a liquidity problem. You are sitting on a mountain of wealth, but you are starving at the summit. You must also have a conversation with your children. Many adult children today understand the burden of a large family home. Tell them that you want to prioritize your health and your freedom. They will support you because they want you to be happy. Start by researching the value of your home in today's market. Look at the prices of smaller homes in areas you enjoy. Talk to a professional about the tax implications of a sale. In 2026, the tax laws are complex, but the opportunities are vast. Remember that retirement is not a destination. It is a period of your life that could last 30 or 40 years. You need a financial engine that can run that entire distance. A $500,000 net worth is a great engine, but it only works if you put the right fuel in it. The fuel is cash flow. The fuel is liquidity. Stop worrying about the headline number of your net worth. Focus on the monthly income your assets can produce. If you can generate $3,000 a month in passive income, you are truly free. That is the goal we are aiming for. It does not require a $10 million portfolio. It requires a smart strategy and a willingness to change your living situation. Your home should be a source of joy, not a source of financial prison. If you are ready to take the next step, start by making a list of your monthly expenses. Compare that to your reliable income sources. Identify the gap. Then look at your home equity as the bridge to close that gap. This is the path to a stress-free retirement. This is how you win the game in 2026. You have worked hard for your money for 40 years. Now, it is time for your money to work hard for you. Do not let your wealth sit idle while you worry about bills. Unlock the vault, take the cash, and enjoy the peace of mind that you have earned. You deserve a retirement where you never have to check your bank balance before buying a gift for your grandkids. You deserve to live with confidence and security. The tools are right in front of you. You just have to be brave enough to use them. Thank you for listening to this deep dive into retirement strategy. I hope this gives you the clarity you need to move forward. Take a deep breath and remember that you are in a strong position. You just need to make a few strategic adjustments. Good luck on your journey to true financial independence.